Okay, hi everyone, and welcome to Incoterms 2020 and COVID-19, Protecting Your Supply Chain Through Diligent Contracts, hosted by FIT, the Forum for International Trade Training. I'm Pamela Hyatt, Content Marketing Specialist at FIT, and I'm thrilled to be able to present the first webinar in FIT's new Challenge and Change series, presenting the most current relevant topics for SMEs in today's global business environment. Before we jump into today's topic, here are some tips to help you make the most of this event. Throughout the presentation, you can present questions to the panel by adding them to the chat feature, which you can open by clicking on the chat icon in the bottom toolbar. We'll be collecting the questions for the Q&A in the second half of today's event. Today's topic is one that we've been hearing a lot about from businesses of all sizes, facing supply chain disruptions and uncertainty in a way that they've never experienced before. In the next hour, we will touch on many aspects of contracts, with partners, suppliers, and manufacturers, and how to mitigate risks by addressing any potential issues right from the formation of the contract. So we'll be talking about customs issues and documentation, supply chain management strategies, negotiation best practices, and of course, Incoterms 2020. To do that, I'm thrilled to say we have with us an excellent CITP panel with a wide range of expertise and experience in today's topic areas. And I'll let them tell you a bit about themselves and we can get started. So today we have with us Audrey Ross, CITP. Welcome, Audrey.
Hi, thanks Pam for having me into the FIT team. So I'm a logistics and customs specialist based in Toronto. I work for a company, I'm in-house for Orchard Custom Beauty, which is a cosmetics and private labeling kind of global project management specialist. So we do all the behind the scenes of some of your favorite products. And we kind of shop the world for you. So a lot of international trade, a lot of contracts, a lot of Incoterms, a lot of customs. So happy to be here.
And welcome to Bruno Morin, CITP.
Good morning. So myself, I've been directly working in international trade for 25 years. I've been to more than 60 countries, negotiating contracts. I've covered all aspects of international trade, the shippings, letters of credit, bank guarantees. And in recent months, the pandemic has kept me really busy for all kinds of reasons, created a whole bunch of problems. So looking forward to participating. Thank you.
And Floyd Simpkins, CITP, welcome.
Thank you. Good morning, everybody. I'm really thrilled to be a part of this FIT team in today's webinar. I might say as part of my introduction that in all my years, probably now about 40 years, working in both the public and public sector, mostly with industry and trade for the province of Ontario, and later as a teacher in the college system, but even more so as running a problematic manufacturing business before 9/11 and during 9/11, serving a number of tier 2 customers in the automotive industry and other industries. There's never been a calamity that has challenged our ability to carry out international and domestic business. So I hope today that whatever we do, in some small way, we can give our listeners some options for steering through these challenges.
Well said. And Clarice Christie, welcome.
Welcome, everyone. I'm really happy to be here with this esteemed group of panelists, and thanks to FIT for having me here. I am Clarice Christie. I'm an international trade professional. I have been working in this field for a very long time. I won't age myself. My career started out in the field of banking, actually, and actually working with exporters with letters of credit, letters of guarantees, doing collection and all of that, which sparked my interest in this field. And I've been doing this for quite some while now, working with small and medium enterprises, starting in the Caribbean and internationally now. And I'm looking forward to sharing my experience with you and answering your questions. All right.
Great. And last but not least, our excellent moderator. Welcome to Emiliano Introcaso, CITP, and take it away, Emiliano.
Well, thank you so much, Pamela, for the introductions, and to the Forum for International Trade Training for not only organizing and hosting this discussion, but also for addressing these important and topics of concern that are brought by different businesses. My name is Emiliano Entrocaso, and I'm also a certified international trade professional with FIT. I am an export advisor at Export Development Canada, and my work involves answering trade-related questions with our customers. I am one of 9 people in the team, so as you can imagine, we get hundreds of questions every month. And when FIT approached me to moderate this panel, I was not only excited, but also amazed to be around this beautiful panelists that we have. They're very, very, passionate about trade. And we're also glad to have, this platform today to be able to address a wider audience through today's webinar. And there are other webinars that FIT is having in the works. So they are listening to SMEs. And if you're also able to contribute some topics for future webinars, please feel free to email marketing@fit.ca. And they'll be able to take on all those future suggestions. So today's discussion is focusing on the unusual times that businesses are facing and the specific topics that most companies are dealing with. With the rise of COVID cases around the world, supply chains have been stressed to the max. And in some instances, countries have shut down the trade, while in other cases, trade continued to happen. So other problems that included some issues, with contracts, for example, where maybe there were penalties due to deliveries not being met. And with customs, maybe documentation changing due to requirements for maybe products such as, products that were determined to be COVID-related supplies. Those needed to go through new approvals or maybe expedited approvals. And all those changes happened so fast that a lot of companies didn't know where to go and get all those questions. So today you'll be learning a lot of different tricks that you can use to discuss with your lawyers when you're drafting contracts, for example. You're also going to be able to embed some of the new changes of the Incoterms that came into effect in January. And mostly you'll be able to also deal with your suppliers, because at the end of the day, supply chain is all about suppliers, and it's all about dealing with your customers and also the manufacturers that provide you with your different inputs that you do. So I'm going to start today with one of my favorite topics. And we always get questions not only at our export help desk, but also through FIT, through the different blogs that we've put together. And I have with me Floyd, which is one of the actual ICC trained Incoterms 2020 for Canada. And so I'm going to start with your question, Floyd, here. How can Incoterms rules be used to ensure contracts having covered all the different key areas of risk and provided proper instruction for any disrupted scenario of deliveries?
Okay. Well, nice to start with such a difficult question, Emiliano. But it's a very important question in today's environment. And I think what it gets down to is it depends on the risk tolerance of both parties. Now, to explain that a little bit further, it basically gets down to how much risk is a seller willing to take given its size and capabilities, and correspondingly, how much risk is the buyer willing to assume, and how will this affect the prospective sale? It seems to me that using Incoterms in a COVID environment requires, first and foremost, a whole lot of upfront discussion between sellers and buyers about that risk tolerance, and before the contract is established. And then the acceptable Incoterm can be applied to the shipment. Because if we don't have that, we're not going to have any agreement on the contract. It's also more important now in deciding which Incoterm to use for sellers and buyers to access certain practical capabilities of their carriage partners, because we're moving goods from seller to buyer. So by example, I'm saying protocols that our providers have in place to manage COVID risk on delivery. For example, does a carrier now use some form of digital confirmation that delivery has taken place, like a no-touch solution, in other words? So a possible solution going forward related to this matter is that I've learned that Conestoga College is building a mobile software application that will help supply chain workers maintain physical distancing and still obtain the necessary signatures to complete their delivery documentation. Because as we know, in Incoterms usage and contracts, you've got to have a signature. So truckers are a good case in point with this application. They show up, they normally have to go into a building, they have to get a physical signature. But this application will allow, using geofencing, get a reading on where the truckers are, how they can be monitored to travel within that range to their destination, and then be routed to the correct door to deliver, and then stay in their truck and complete their documentation digitally. So I think those kinds of innovations might help us kind of stick handling through, with respect to Incoterms, a critical element, which is ensuring delivery has taken place.
Well, I can tell you that you're giving a lot of happy faces, I'm sure, because this is a good solution that it's, going to be able to supply specifically to our industry with something that allows us to continue our regular work with the supply chain. So another question that we have here, Floyd, is what are some of the specific Incoterms that are particularly important for contracts in this type of environment?
Yes, well, I guess if we look at it from the seller's perspective, any term where the seller takes more responsibility for getting the shipment closer to the customer before officially transferring risks is particularly important. And, I like to think in terms of Incoterms as we're using them also as a marketing and sales tool. I mean, how do we want to get them to the customer so our customer is satisfied that delivery is going to be in their hands where and when they want them? So using Incoterms to clarify risk, where risk actually transfers in the contracts of carriage, is the most critical at this time, especially where many different carriers are being used to deliver contracted product to buyers. As we know, we can hand it off to one carrier, and then it's going to go through the hands of many other carriers. So the closer we get it to the customer, like in CPT, which is carriage paid to, CIP, carriage and insurance paid, and more so in the D terms, delivery at place, DAP, delivery at place unloaded, DPU, and DDP, delivery paid, where the shipment is even closer to the buyer's door. Those are terms that are particularly important in this environment to make sure that we've got above all, the delivery point clearly identified, because we're trying to get it in the buyer's hands safely and securely and ensure that delivery is in the right place at the right time.
Yeah, if there's anything that, when we were being trained on the new terms that they were making a big emphasis was on the actual delivery, where everything changes hands and the risk transfers. So, with that said, Floyd, like Incoterms were updated obviously for 2020, it started in January. So what are some of what have changed for the importer exporter should know about, or are there any specific resources that you will suggest?
Yeah, there are a few technical terms that have changed, and one of the big ones was FCA, where the carrier selects, or rather the buyer selects the means of transport. And that was a big one that people should look at, because if people are worried about taking the shipment too far, if they use FCA was clarified from the standpoint of 2020, so that it's very clear that when the goods are handed over to the buyer's means of transport, that's when delivery takes place. So as to the other fine points, I think there's lots of resources out there, both public and private. I would suggest, frankly, from a maybe a self-interested point, that FIT's Incoterms training, now delivered online, is as good as any resource out there, because it's based directly on the partnership that they have with the International Chamber of Commerce, who devised these Incoterms in trading guides and materials. So I think the FIT online training is the best way to go.
Okay, that's great. Thank you, Floyd, for that. We're going to move now from Incoterms into customs. And obviously, this is a key topic for Audrey. She's dealing with customs on a daily basis. So thank you, Audrey, for being here today. And well, one of the questions that I have here is, what are some of the problems that you are, or not you only, but everyone is encountering at the border with international shipments right now? And what are some of the tips you could provide to businesses on how to prevent those common issues?
For sure. So I think we'll start with right now, current situation, specifically around COVID, is just an increased scrutiny. And depending on your product line, if your business had made pivots into making hand sanitizer or making fabric face masks, one, there's the increased scrutiny just because it's they're health and safety products. And so they're highly regulated, which I think there were some companies who maybe didn't realize that. And two, there were, the testing and those kinds of restrictions around those products. So for most businesses, it was, this kind of great idea to pivot, but at the same time, there were some regulatory concerns that they may not have been aware of. So that's those are the hot items, anything around PPE, fabric face masks, even hand sanitizer pivots. In general, the sort of most common custom problems are around HS codes, of course. So making sure that your business is using the tariff tools. There's a number of resources on Tariff Finder from EDC. There's, the World Customs Organization can help you out there. If you're going into different countries, the World Trade Organization has lists as well. So there's lots of ways to learn more about those and to find those. But HS codes are really, in the customs piece, the most important kind of descriptor. And the next piece, your descriptions are being too vague. So along with your HS code, customs authorities have to see what the description of your product is, because they want to ensure that it's matching. So if I say a bag, what kind of a bag? Because as it turns out, in Chapter 42, there's like 50 different types of bags. Is it made of leather? Is it made of PVC? So, we really have to get into, it's a bag, it's a handbag, it's going to be a purse, it's going to be 100% leather. So those kinds of key descriptor words on your commercial invoice and even on your bill of lading are kind of very important to helping match that HS code. Another thing, especially when you're dealing with free trade agreements and cross-border trade, exporting into the world, there's country of origin versus country of transit. So I see a lot of, I know here in-house, there's going to be some confusion from my teammates around, okay, I see that it's coming from this country and it's going to, say the US. Where was it made? Was it actually made in Canada? Was it made somewhere else? Because that's going to have a big impact on the usability of those free trade agreements and the legitimacy around that. The other thing that I notice is that parties who are involved in the transaction are unclear. Now, your business might be a bit more straightforward, and it's you are a seller and you have a buyer. And that's lovely. I wish that was the case all the time for me. But for some of us, it's much more complicated. And we have a manufacturing partner. You might have an agent involved. You yourself are a sort of the overseeing party, which is sort of what Orchard does. We call these contracts triangulation, which just sounds very complicated. And then we have a buyer, and we also have, who we might be delivering to, and that might be 5 different addresses. And how do you fill out that paperwork? So it's important to be really clear on who's doing what. And Floyd was certainly talking about that in Incoterms, who's responsible at what point. So even though we're talking about customs and sort of documentation, it all relates into your responsibilities and who's involved. Another key piece, if you are doing importing, depending on what your Incoterm is and what you've set up. If you are the importer of record, if you're allowed to be the importer of record, because for some countries that's not allowed to have a foreign importer. So in the case of if you're making Canadian exports and you're shipping down to Mexico, Mexico doesn't have a non-resident importer program. You need to rely on the person who's buying the goods or another party to be able to import on your behalf because they have to be a Mexican resident. I'm looking at Colombia right now and I'm trying to determine if that's an option for me as well. So it's something I'm doing right at the moment. So it's something to think about. And if you are the importer of record, the key is, you know, for a customs department and perspective is who's making the payment of these duties and taxes, right? So your, you know, CBSA here in Canada wants to know who they're getting the money from and that they're going to get it. So it's pretty strict.
Well, that was great, Audrey. Thank you so much for that. Stick around because there's a few questions coming through for you after in our Q&A, so we're going to go through those as well. Now I'm going to move to the trade compliance piece and the supply chain piece of the webinar. And what I would like to do is I would like to bring Bruno, who has a lot of experience as well in there. And Bruno, what are some of the main issues that suppliers and shippers are facing in terms of delivering the products? And how can the SMEs work with these vendors to prevent them?
Okay. First, it's as an SME or a buyer, it's perfectly normal to be nervous these days. So many things can go wrong. You can buy a product from a supplier and for nobody's fault, like it's not the fault of the supplier, it's not the fault of the buyer, something goes wrong. There's, we saw the strike at the Montreal port earlier this year. All the COVID related problems, shutdowns around the world at seaports. So many things can go wrong these days. In addition to what we all know historically, you ship a container and in transit, the container gets damaged at the transshipment port. So it's not the fault of the supplier, not the fault of the buyer, it just happens. So for me, it's really important as a buyer, as an SME, that you make sure your supplier has a good insurance policy. And that when you make a list of the required shipping documents, that the insurance certificate is included in that list. So this way, you know your supplier is serious, that if there's a problem, you have an insurance company that's going to help both supplier and buyer to resolve the problem. Because the problem in international trade is the costs go up so fast. If you have a problem in transshipment or at arrival at the seaport, and you don't have your documents done properly, and your goods get stuck at customs, the fees you have to pay is on a per day basis. And if you have a small buyer, it won't be long before the buyer is going to say, you know what, I give up. These fees are, I'm going to abandon this cargo. I don't want it because the fees are more than the value of the goods. And then, so as a supplier, you're stuck. So right now, again, it's perfectly normal to be nervous, to ask for extra time. When you, as an SME, you want to buy goods, you cannot go just in time, in my opinion. You need to plan for extra time for delays from A to Z. Could be the trucking company that doesn't have a driver because there was in that specific city, there was an explosion of COVID cases. All of a sudden, there is no driver, or there is no empty containers. That I've seen that as well. So give yourself extra time. It's better to receive the goods a little bit earlier than to wait until the last minute and risk having problems.
So what happens if it's sort of the inverse situation where maybe the buyer is dealing with a supplier delinquency, let's say? How would you address that?
Yeah. The main point is as a buyer, you need to document each step. Because again, I presume that before you signed the contract, you made sure the supplier had a good insurance contract. So with that assumption, as a buyer, you need to document everything you did. I sent this email, and you also right away, as soon as you have, you see the problem with the supplier, you need to file an intent to claim letter. Just send it to the freight forwarder, send it to the buyer saying, listen, we do not like what has happened. We're not happy, and we intend to claim. So 6 months on the road, after you went back and forth with the supplier and the insurance company, it's documented that it was your intention to get your monies back, either from the supplier or the insurance company.
Bruno, with all these changes with COVID, and even in the future, if something similar like this pandemic may happen, where should you think that suppliers and manufacturers should be placing their I guess their manufacturing facilities in case there is another emergency or something maybe that is on a specific region that is safer? Like, what do you think about like the term reshoring, for example?
Mm-hmm. Well, this is the whole issue of risk management. So in general, it's recommended to have more than one supplier, because particularly these days with COVID, it's quite risky to put all your eggs in one supplier, even if you have to pay more. So for example, if you have a local supplier that has higher costs, and the product that they sell is not perfect, but as a backup plan, it's really important that you keep a good relationship with that local supplier, because your international supplier that has a better product, a lower price, he is physically very far away. So it's always good to have more than one supplier for a given good, but particularly these days, to be safe.
Great advice, Bruno. Thank you so much. Okay, so we're gonna move into the contract negotiation part of the webinar. Since we have Clarissa that has dealt with so many SMEs in the past, I think she will be able to answer some of these questions that came through, especially from SMEs, which are the engine of the economies in many countries. So Clarissa, before a contract is written, what will an SME be asking specifically from their suppliers or manufacturers to ensure that they have covered all the basics? And then as a buyer, if you were a buyer in the past, like what can you expect from your suppliers to be asked during those particular negotiations?
Thank you very much for that question, Emiliano. From a SME perspective, you have in some instances SMEs where it's their first time actually entering into a contract, and then you have seasoned suppliers, seasoned exporters who know the drill, know the steps and all of that. With before you negotiate a contract, and usually contract, you get leads at trade shows in different arenas, business development areas, and or activities rather. And you have maybe gotten leads, and you're thinking, okay, or even before you get leads, you're going to a trade show. It's always good to have an idea of, you have an understanding of your supply chain, but you still need to know the rules of the game. And when I say the rules of the game, the trade rules. If you're going to be supplying to a country where you have a trade agreement with that country, understand what you can capitalize within that trade agreement and what you'd have to do to that product to make sure that it can enter that country. And when I say capitalize on different trade rules or different provisions that are in a trade agreement that you can utilize. The next thing is also that this product is going to this country. Do I have to modify that product? And what are the costs related to modifying that product, right? That's extremely important. What are the modifications? What are the rules around the modification and the cost that goes with modifying that product? Another thing that you'd have to look at also is your suppliers to produce the goods, or if you're manufacturing the goods off-site from out of your country, will they be able to deliver? What are their costs? Do you expect any change in the cost to produce that product? Because you're going to have to, when you're doing the costing of your product, you're going to have to include that in it to come to your final price. So you'll be asking along, the questions you're going to be asking along that supply chain is the cost to deliver, time to deliver, and the capacity to deliver, right? That's extremely important. The other thing that they'll have to do is also understand, are we going into a country where the culture is different from mine? Do I have to look at language changes? So there are many aspects that they'll have to take into consideration before writing, before the contract is written, or even before going to negotiate. You have to pull your costs together, how you're going to get the goods from one place to the next. Are there any problems, anticipated risk along the way? Right? So these are some of the things that an SME will be asking their suppliers and manufacturers, to ensure that they can actually deliver on the promise that they've made to their potential buyer or to their buyer.
Clarissa, do you think that there could be any red flags that may come up during contract negotiations? Do you have maybe some examples to provide the audience?
Of course, there are many red flags that can come up during a contract negotiation. And I will take a look at something that's a creative product. Or even it could be creative product or food. In the creative realm, you'll be looking at someone asking for transfer of your IP. You have to be diligent to understand, why do they want that? Will that restrict you, your IP, your product going to another person, another company, selling to another company? Because you're in business to make money, right? Asking for exclusivity, especially a new exporter, asking them for exclusivity, especially even on a food item, a fresh food item, that's unfair, right? So those are some red flags to look at. Another thing that we could look at is non-competition. Why are you going to ask for a non-competition clause for a product? Maybe you have plans to go into that field, and you're eventually the person who is your first supplier, you're going to be pushing on. So those are the type of things that you need to look out for. Payment terms. If someone is asking for payment upfront from a buyer perspective, or if a buyer, you're a seller, you're a supplier, and the person does not want to pay up front, they want an open account, you have to be, that's a red flag.
Okay.
Another thing that I want to say for Emiliano is also with regards to contract. If you have a lead, you have to do your due diligence to learn more about who is your buyer and what their performance have been with other suppliers.
Good point, good point. Clarissa, what are some of the common contract errors that SME make, and how can they fix them? And obviously, when dealing with a contract, you are going to deal with also a trade lawyer, hopefully, that is going to review that contract, which is the best practice. But again, what are some of those common errors that happen?
Sometimes you get a contract, you get an order, and you're really excited about this order. It's a verbal agreement, and you're excited, and you go ahead and start making preparation. You have not discussed anything else around. We just spoke about Incoterms. You haven't thought about risk. Who's going to take on the risk at what point of the logistic chain? All of that is not taken into consideration, and you go ahead and ready to send off. A verbal contract is not a sound contract. It's very ambiguous. Another thing which Audrey spoke about earlier is ambiguity of the product, which will get you into trouble when it comes to having the correct HS code. Now, you do not want to put that burden on the buyer that their goods get seized at the border because you have an incorrect HS code. Another thing that another common error is also not, I'm going to go to my nose, flip-flopping on price. You have to know, going back to my first response, you have to know do your costing analysis and pricing analysis so that you know that the price that you're delivering, you're given in that contract, is proposing in that contract, is the price that will give you your profit, will cover your costs, cover your risk, and all of that, because there have been instances where you quote a price and you're very happy about that price, but inflation, FX, foreign exchange, rates fluctuation, and then you want to come back to a buyer who you have signed a contract to say, I can't supply these goods because, you know, the price, I'm going to lose. So to prevent such things from happening, you have to do your correct pricing of your product, right? You have to not flip-flop on price. You have to make sure, another thing that you have to be clear about is in which jurisdiction dispute settlement will occur if a dispute occurs, right? And also what method of dispute settlement you'll be using. So those are some of the common contract errors. And, you know, it's always good to do that. Make sure you have all your I's dotted and your T's crossed before going into a contract negotiation. It's always good to pull together a team so that you're covering all your bases, right? You're covering most favored nation, you're covering, you know, certificate of origin, making sure you have the right HS code, because you don't want to be a burden on the buyer, but you also don't want to be losing anything on your end, right? If any dispute comes up.
Well, thank you so much, Clarissa, for that. I believe that we have gotten Pamela's queue there to go into the queue and answer.
Oh, sorry, Emiliano.
Yes.
You have to have legal counsel, whether you're a seasoned exporter or a new exporter, because laws change. Laws change. Even if you have a revolving contract, there are instances when laws change, and whether it's a revolving contract or not, you're gonna have to make amendments to those contracts to go with the law of the land, especially if you're using a third party jurisdiction for dispute settlement.
Excellent point, excellent point. So Pamela, you can take it from here in terms of the questions. I know there's a lot of them, I just couldn't see them all, but I'll let you moderate this part.
Awesome. Well, thanks so much, panel. Thanks, Emiliano. There's some great information come in already, and we are having lots of questions come in, so I'll get right to it. And sort of going forward on what Clarissa just said, with you need legal counsel. One of the questions is about, for small businesses, is it worth it to work with consultants and other experts for contracts, or bring someone else in-house? So I'll throw that out to anyone on the panel. Just maybe we'll start with Clarissa, because you were just talking about how you need to have the legal counsel. Is there anyone else that you would bring into that as a small business?
In terms of negotiating, your negotiating team?
Yeah, your negotiating team, I think, and also just in general, making sure that all the contract details are correct and you've covered all of your bases.
I would say, you know, it's different for the products that you're exporting or the services that you're exporting. So your team could look like someone with an IP lawyer, could be a contracting lawyer. It could be an international trade expert who can guide you along the way in terms of different aspects of international trade concepts and conventions that has to be taken into consideration. Another thing that I meant to speak about earlier too is culture and how language is interpreted. If you're going to have a contract in another language, things do not translate the same way. So if you have a business lawyer who speaks more than one language, because international trade terms do not translate the same in other language. I teach, and there are some terms that my students from different parts of the world that use characters, their language are characters, don't understand what the connotation of a word means, right? So those are some of the things. So I would think that you would need to pull together a team that really understand international trade laws and conventions, the UCC conventions, all of that. Also, just having someone who understands the sector that you're working in. A sector expert is also good to have on that team. I hope I answered the question for the person.
Thanks, Clarissa.
If I can jump in too, like when you're really small, like for the really small people who are like the 1 to 3 I've hired, I've got my, friend helping me run this business, but I've just started it. As much research that you can do yourself about your business and about where you want to go, if you do as much research as possible and then take very specific questions to your lawyer, to your accountant, to your trade consultant, it will cost you less money. If you go to a lawyer and you're like, I want to do like this big thing in some other country and it's very vague, they will be very happy to help you and spend hours doing research on your behalf that you have to pay for. So the more you can narrow down your questions and be very strategic about how you're using these consultants, lawyers, accountants, that's the key. That's how you can use them very effectively while not spending a bunch of money on it.
Yes.
Yeah, and this is Bruno. Also, don't be afraid to pick up the phone and call the buyer, call the buyer's freight forwarder, talk to people from all around the world, to ask questions, to ask to see a draft of the shipping documents, to make sure that the HS code that you're planning on using is going to work for them. So don't assume that they're going to accept it. Just call them and chat with them. It's going to save you a lot of headaches.
Yeah. Having freight forwarders and custom brokers help a lot too.
Yes.
Yeah, and those could be part of your team, right, Clarissa? As you were
Right.
saying, just don't think it's just like people, right? Could be companies that are helping you, and sometimes when they're providing you a service, they'll include that as a freebie of giving you some advice as well too.
Oh,
Yes.
and another thing we should not forget, we have our trade commissioner services too that can give some guidance too. They have a lot of information there, and EDC also have a lot of information on their website, and FIT. Thank you.
Thanks, Gracie.
Good job.
I have another question here of a little bit more directly talking about Incoterms. So I'll throw this one more to Floyd and Emiliano to answer. For the revenue recognition, what should the contract have included? Have a revenue recognition for the export sale when the product is moved to the port in origin, even with the Incoterms, CIF, DDU, etc.
So I think if they're talking specifically about when to recognize that sale, just know that sometimes Incoterms don't cover all the bases. They really cover the specific on when the delivery is going to happen. So it doesn't necessarily mean that because you pay for the goods, you're owning the goods, or if you have received the goods and you haven't paid for it, that you own them, right? It really happens when that delivery or that risk transfers from the seller to the buyer. So knowing the right Incoterm or selecting the right Incoterm right, before you even ship and before you even strike up a purchase order, that is the negotiation that Floyd was talking about at the beginning of the webinar, where you need to really discuss this in detail with the buyer. Buyer and seller is both. This is not just I'm the seller, I'm going to decide the Incoterm. You are the buyer. You should also negotiate if that's not the Incoterm you want to do. In some cases, the seller ends up using the Incoterm that the buyer basically requested the quotation on, because that's sort of the default. But if you are the seller and you're not comfortable with that Incoterm, feel free to negotiate. That's the whole point of international trade. Negotiate and see what type of agreement can you do. If you're a seller and your buyer is asking you to do DDP, you have to be very, very careful with DDP, because it's including the duties, all the clearance, and everything that happens in someone else's country. So unless you have done that in the past many times and you're comfortable with it, then you might not want to take on that specific risk. I don't know if Floyd has anything else to add to that.
I might add, as a matter of fact, thank you, Emilio, because I was in the midst of typing an answer to that question. Saves me a lot of typing. I would only add that this is where the contract comes in, because whatever term you use, I would say you should specify the means of payment or how revenue is going to be received in the contract. And then that could line up with the appropriate Incoterm. So the contract becomes a very important vehicle for defining that and clarifying that. That's the sales contract, I should say.
Correct.
Okay, thanks, gentlemen, for that. I have another question coming in. I think this might be more Audrey's area of expertise, but I'll throw it out to whoever wants to answer. As a new company with lack of capital, I would ask for cash in advance via wire. Is letter of credit better? I don't want to send any red flags. I'm just looking to build up capital.
I mean, in this day and age, I'll be honest, we've moved away from letters of credit because they're very complicated. And most parties, especially the smaller companies, just don't have the expertise in dealing with them. It can be a bit cumbersome in the language. So for us, for my business and what we do, it's very cumbersome and not helpful to us. So we've moved to those kinds of electronic transfers and deposits up front. Now, that's something that we've come to as a business because, of course, a letter of credit is one of the most secure ways to do these transactions. So, a lot of it has to do with risk, and I'm sure my colleagues here are going to jump in as well. But from my perspective, it depends on who you're working with. I don't know that it's a reputational aspect to your business that if you ask for a deposit up front that's negative. It depends on the size of your business and who you're dealing with. For us, we deal with large retailers, so we can usually get insurance on them. They're identifiable in the credit system if we're dealing with someone like a Bath and Body Works or a Shoppers Drug Mart. If you're dealing with smaller companies, then that's a bit of a different risk. And if you're dealing with companies that are overseas, the risk again is different. So my perspective is that letters of credit, if you're not familiar with them and you can't afford to hire an expert, they can be very cumbersome. But they're a specific tool for a specific purpose.
And just know that your bank also can help you if the only way to deal with that particular, let's say, customer is through a letter of credit, because some countries that's the only way you can move money around. Yeah. That you discuss it with your banker here locally as well, because they could also help you with that. And yes, they are complicated, but at the same time, that might be the only option, right? So.
I think they've been around the longest. I mean, a letter of credit's been around since the 17th century or something. But what happened in the last 10 years or the last 15 years with the internet is electronic transfers went from being very expensive to being, in some cases, almost free. So I think there's been a lot of shift in usability of wire transfers globally on a global scale. But at the same time, you've got to watch your risk.
Yeah, and I think it's based also on relationships too, because if you have a good relationships, if there's a good relationship between buyer and seller, and this has been going on for a very long time, you can move away, and you have there's no country risk, or there's no problem with the banks in the countries that both the receiver and issuer country. Then it's okay to do cash. There are no risk in money being stopped along the way doing a transfer, you know what I mean? So utilizing cash as a payment, cash in advance, open account, it's based on a relationship between buyer and seller. So if they have a good relationship, then sending cash is okay. So I would encourage you to build that relationship, build that payment history with the buyer, and see where it goes from there. Then you can move away from a letter of credit if it becomes difficult or too costly for you.
And I think, Liliano, correct me, you're certainly more current on this than I am, but EDC, I think, still offers that kind of credit risk insurance. So, if a company is concerned, they can go to EDC and acquire that insurance as an extra way of ensuring that they're going to get paid.
Yeah, especially if they're doing obviously open account. If we're able to insure the company, then that tells you quite a bit of that company, right? That we trust them, but that gives you also peace of mind. And as I always said to our customers, remember that whatever cost you're paying for insuring those receivables is something that you can include in your costing sheet so that you can actually recover. So sometimes you might be telling anybody that comes to you with an open account request saying yes, and they're like, whoa, that's great, but you're charging for it. So at the end, they are paying for that peace of mind for both parties, I will say.
And from my point of view, if you are, let's say, a small supplier and you want to ask to be paid cash in advance, there is nothing wrong with that. The buyers, they will understand. It's very natural to say, I want to be paid cash in advance. Now, the buyer might not say yes right away. He might say, well, no, it's too risky for me. I don't trust you. Or you can negotiate, maybe give the buyer a small discount to encourage the buyer to accept cash in advance. So it's a good point to start. It's a good place to start a negotiation as a small supplier.
Thanks for that, everyone.
And then I was going to add, if you're willing as a small supplier to take on a little more risk in the shipment, in the transaction, you can use a term that satisfies the buyer. You're going to get it closer to their door. So again, that depends on your risk tolerance. So the closer you get it to their door, the more willing they might be able to pay you up front.
Great point,
Good
Joel.
point. I want to make sure we have time to get through some more of these questions because they're flooding in. This one I think is more of a Bruno question. Is there a way to protect yourself financially from delays in transportation?
As a buyer, I presume that you're concerned about the supplier being late shipping. Is that the question?
Yeah, if there's a way to protect yourself from delays in transportation financially. So if there's any mechanisms you can put in place to sort of prevent that kind of risk.
Yeah, I have to think about this one.
Maybe like
Anyone
a
else
penalty.
can jump in as well. Yes, go ahead, Emiliano.
Once it's
I'm
in,
wondering
it's
if maybe
in.
like Bruno will say something regarding the penalties that, if you don't deliver by a certain date or time, that could be put on the
Yes,
contract maybe, right?
Good point. That each contract, usually they do have a late shipping penalty, but the problem is that those late shipping penalties are really small, like 0.5% per week, up to a maximum of 5%. So if your supplier is really late, you have a factory to run, that 5% is nothing. Like, it's going to cost you 100 times more than the penalty. So it's not that useful. I think it goes back to my earlier point about the risk management. To have a second supplier, a relationship with a second supplier that is local, even if the product is not as good or more expensive. This way, if your international supplier is late, you have a backup plan. It's just a whole issue of risk management.
I have another question somewhat related to that. What would be a midway solution to set up a currently available intelligent contract given the potential unforeseen risks and delays due to the COVID crisis? Or is it better to keep regular contracts for now?
Well, I think it's these days, the sales contract, I think it's Floyd that mentioned it is really important, more than before, because of the environment we're in right now. So you do need to right now to spend more time putting together your sales contract very clearly.
And I would suggest too, those contracts are so long sometimes. And, I've been through this in my own business. You look at it and you go, oh my gosh, do I have time to read this? I trust this forwarder or whatever, but you can't because the risk is on you. So you've got to read those contracts and make sure that you clearly understand every element of them. And where you have issues, you got to do your, ask your questions, add your items, initial things. You really have to become the Philadelphia lawyer on those things to protect yourself, to add to Bruno's comments.
Yeah, and the buyer will not be upset. You think that if you go through the contract and you insert 25 different comments with initial each change, I tell you, the buyer will not be upset. The buyer is going to clarify the sales contract. If the buyer is upset about one little point, he's going to tell you and you can go back and forth, but it's good investment of your time. I agree.
Great, thanks. This question is for Clarice. In your international contract negotiations, do you ever have issues with choice of law provisions, choosing which law will be applicable in the case of an issue?
I would suggest I'm thinking that this is a question with regards to choosing the governing law or jurisdiction for dispute resolutions, dispute settlement. And what I usually encourage SMEs to do is to choose a case law choose a jurisdiction when negotiating with your buyer, because it's not one-sided in making that decision. It's actually to choose a country where the legal structure is similar to yours, and where the case laws and civil law are also similar. So usually, companies would want to choose their own country, but the other party would not want to choose their country, and then you end up have to find out which jurisdiction is best. So it's always best to stay closer to the countries with laws that are similar to yours, and the legal structure, legislative structure is similar to yours. I think Floyd wants to step in, if I'm not mistaken. No.
No, I'm good. Thanks.
Light up. I thought.
A number of questions are coming in about appropriate use of Incoterms, so I was just looking to see if I could maybe try to answer them through the chat.
Okay.
And there's just a few more minutes left to take questions, so I'm just going to make sure we get to a couple more here. For any or all of the panelists, do you have any comments on the recent experience with payment on collections basis through the banking system, and risks of poor practices around the world where buyers get control of the goods, even if the BL is consigned to order of shipper?
Yeah, I do. We've had a lot of problems, particularly in April and May, with these cash against document transactions, because DHL and FedEx and others were not able to move the documents. So we're supposed to route the documents through the banks. The supplier sends the documents to his bank, and then the document goes to the customer's bank, and then to the customer. That's a lot of steps. So these payment terms, cash against documents, are difficult right now in the COVID time. Very difficult.
Okay, thanks everybody. Let's try to get one more question in here. Due to COVID-19 and goods delivery to the buyers involved with supply chain, what Incoterm 2020 should buyers consider to use to mitigate the risk of COVID-19? Is there a few that sort of stand out and address these kinds of issues? Or maybe it's just more of like a holistic approach to your contract?
Well, again, I would say it all gets down to your risk tolerance. If you have a low risk tolerance as a seller, to taking on a certain risk to get the product to the customer, I would say the closer then you effect delivery closer to you, the better, if your risk tolerance is low. So using FOB, free on board, where it's delivered once it's on the vessel, secured by and identified by the buyer, or FAC, where it's delivered at the disposal of the buyer to be placed on the vessel. Those are closer to you, but it gets it to a delivery point that the buyer has accepted and the both of you have agreed upon. So that keeps your risks low, keeps your costs low, and as long as the buyer accepts that, you've made your delivery.
Thanks, Floyd. Well, we're at 11:59 here by my clock, so already we've got to wrap it up. So sorry if we didn't get a chance to answer your questions, but thank you for everyone who has submitted questions. And of course, thank you to everyone for attending today's webinar, and a big thank you to Emiliano and Jocasso for moderating today's event. And of course, to our wonderful panel for your fantastic insights, Floyd Simpkins, Audrey Ross, Clarice Christie, and Bruno Morin. Seeing a lot of questions that came in specifically about Incoterms 2020. So to learn more, you can definitely check out the Incoterms 2020 online course that Floyd mentioned, presented by FIT and the Canadian Chamber of Commerce in partnership with the Canadian Trade Commissioner Service and Export Development Canada. And the link to that is in the chat box now. I'd also like to let everyone know about, for more about documents management, customs and compliance, check out the document management fit skills workshop as well. I'll add that link to the chat for everyone. And that's it. So to get a summary of today's event, stay tuned for our recap article that'll be up on tradeready.ca later this week. Thank you again, everyone, for joining us this morning, and have a fantastic day.
Thank you.
Thank you. Bye.
Thanks, everyone.
Bye. Have a good day.
Bye.
Such a jam.